It's going out there. It's February 23rd. I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break down the headlines and tell you what's really moving these markets. It's going to bring in Daniel. It's Daniel Wednesdays. I'm glad you came in today since you decided not to come in yesterday, Daniel. How's it going, man?
It's going well. Yeah, it was a rough day. Just didn't feel well. So
yeah,
back in the saddle again, as Aerosmith would say, though. And it's Wednesday. I can't miss Wednesdays. Wednesday's the best day of the week.
No, it's funny. Daniel calls, I'm sick. I can't make it in. I'm like, it's all right, bud. Don't worry about it. But yeah, you were feeling, damn, to be honest with you, I think that may be the first time you called us sick in like 4 years. And, of course, since, I'm going to give him shit for it, right?
Yeah.
Since it never happens. Or I'm like, dude, it's all right. And so, but
I did feel bad. I feel worse about it today because I'm going to play this card because we're not going to buy this, but I don't plan on working the entire afternoon today. 23rd is my birthday, Frank.
Wow.
Look at that. I surprised him. Put the camera back on you.
I
got him.
Surprise me. You know what's funny? I got to tell you know what? I'm pissed. I'm pissed at, I won't even tell you who it is.
I'm going to go hit golf balls.
Sends me everyone's birthday in the company. And make sure you send me whose birthday the company, because we're still relatively small. We got 17 employees total. And I always say, make sure you send me. And they didn't even send me. I knew it was because we had all the birthdays. We had my mom. We had my daughter, a bunch of cousins, just February's nuts, so I didn't know it was the 23rd. Happy birthday,
look at that,
man.
everybody. Look at that. That's genuine. Now look at that. Yeah.
Now I feel,
thank you, Frank.
You know what? I don't really feel bad. I just made fun of you, actually. I was going to say I do, but I don't. But that's okay. But happy
I was going to say,
birthday.
who calls in and plays hooky the day before their birthday? What an idiot.
I
You're
know.
probably thinking, I don't even know why, what's going on
Are
here?
you going golfing later at least?
Well, I want to try to go hit balls. Yeah. Finally, we got beautiful weather, so I want to at least hit the range, have a cigar and a beverage. 36. 3-6.
That's cool, man. You're getting up there. Don't worry.
All right, let's get something serious. Enough about this. 50. I played that card to get at what?
No, I'm going to be 50 in May, so you're fine. Don't worry about it. I don't want to hear how old you feel or whatever. So,
oh, no, I don't. Yeah, no. Just pointing it out. It's just a number.
Definitely don't want to hear it.
Hey, next year, 2-2-3-2-3. That's kind of cool, too.
Yeah. Nah, we'll
just for numbers games. Anyway.
I know. Next year, I'll be sure to bring that up. All right, listen. Let's
something
get
serious for crying out loud.
Let's get to the markets because the dominating story to talk about yesterday too continues to be Russia and the Ukraine. The market's up today, and whether invading, not invading, they're taking over two territories in the Donbas region. And not to get too technical for people who aren't really following the story in detail. These are on the Russian border, which are Russian-backed areas since 2014. So, there's a debate whether, they invaded or not, where, obviously you have the UK and, most of NATO and the US saying they invaded. They didn't invade really yet, but, we'll see what happens. But it's still driving the markets, right? I mean, it's still headlines everywhere and, you're seeing sanctions, right? So, we have to pay attention. It is moving the markets. I want to get your thoughts on it, Daniel.
Yeah, The invading thing, it's so crazy to see how words can be and will be taken out of context and things. Have you seen the latest Trump quotes about how the left is out there to say he's quickly praising Putin and telling him attaboy because he said it's a genius move or whatever? And he was being coy from what not to sit here and defend him, but it was funny because he made comments about how it was smart where you say, oh, well, you declare the independence and then we're going to peacekeep. Like, oh, that's a real peacekeeping mission instead of just going across your border and things like that.
Yeah.
It's definitely driving markets. We tape this live in the morning. I don't expect is the market still up?
Yeah, the market's doing well.
Okay. I don't expect that to kind of hold. I think that's kind of a bounce, but there's going to be a lot of opportunity around volatility. Speaking of Russia, Frank, what has my attention on Russia is, have you followed this at all with the finance ministry of Russia and then the Bank of Russia?
No.
And how they are disagreeing about Bitcoin?
No, I haven't seen it, no.
It's wild. I mean, to paraphrase quickly here, the Bank of Russia sounds to say, hey, digital currencies are terrible, they're a threat to us, but yet Putin seems to be in favor of Bitcoin and things like that. Now, you naysayers out there are going to take this and run with it about, hey, it's illegitimate, it's only for bad uses, they're going to get sanctioned, which they are. We've handed out some sanctions, we need to talk about those and market relation to that. But the concept of, how do you have it if Putin is for it? How the hell do you have any other disagreement over there? It's just fun PR. I mean, I'm kind of going down this rabbit trail. There's a great article on Zero Hedge. I've seen a few things out of Reuters, and it's kind of amidst all the Ukraine stuff, and I don't mean to make light of that. That's terrible. I hope there's not war. That's awful. Yet the Bitcoin thing is just kind of, how do you have that disagreement over there? And what does that mean? They've already banned it. We've seen headlines about that, similar to China, which just, rinse and repeat. Something is there, and I think that's more bullish for the crypto in general than not. And that'll be something I'll follow and look to report back. But that's just one of those, there's something under the surface there that is not in the limelight, and that's why you should continue to research it.
Yeah, I mean, we're looking at so many stories. I mean, I think it was yesterday that, the president of Ukraine said, they haven't invaded. And then we're being told they have invaded, so that's the president of Ukraine saying that. So just the information out there, the misinformation, I think is funny. But, it's also funny is how the U.S. and the U.K. can't do anything. The fact that Ukraine's not in NATO, never be in NATO, they can't do anything. So, what do they say is, you had Biden tell Putin that the U.S. would impose swift and severe course if they invaded. Now they're calling it an invasion. So what does the U.S. do? They cut off Russia from Western financing. Okay, Russia has a surplus. They don't need financing from the West. Okay, Europe's response was even funnier, right? The UK froze assets of 3 billionaires. I mean, if you froze the assets of 3 billionaires here in the U.S., is that going to result in the U.S. not invading another country? I have no idea what that means. And they also said they froze assets in 5 Russian banks operating in the UK. Again, very, very little steps here. Germany's response is even better. They said, hey, we're no longer supporting the Nord Stream 2 pipeline. And I don't know if you're familiar with that pipeline. It's not operational yet. They have gas in it, but they're still going through finally completed, I think, in September. So it's not operational yet. But this is going to send gas directly into Germany, bypassing the pipeline that goes to the Ukraine and Poland. So it's a huge deal to Germany. Huge deal to Germany, especially if you really think that Ukraine's going to get invaded, whatever. So what does this do? Like these Germany sanctions, what does it do? It results in oil prices surging, which is great for Russia since they're the world's biggest oil producer and pretty close to it. I think they just surpassed us because the U.S., we cut back on drilling and focus on renewables to save the planet, renewables that we don't have available yet, right? So we're cutting back. It's terrible for Europe since 40% of all Europe's gas supply comes from Russia. So you're cutting it off even more, which is good. And prices are out of control there. I don't know if you've seen them. They are it's a crisis level. It's crisis level, right? And not only that, it's terrible for the U.S. and the rest of the world because now what? Now we have to pay higher gas prices, higher energy prices, which we're seeing as, they're starting to surge. So these are the sanctions that push against Russia, which are fantastic for Russia and terrible for the rest of the world. To me, I don't know if I'm going to use the right words here. I could say it's ironic or hysterical. And I mean that, not that it is actually funny, but we have this perception where Russia is the number one enemy of the world. Right, where we trash Putin, we lie about Russia, or tell them how we lied about Russia fixing our elections. We paint a picture like they're looking to conquer the world, similar to Germany, that's Germany, World War II and stuff like that. And this is the start of it. We paint this crazy picture around them. Why? Because we don't do any business with Russia. It doesn't hurt us. But who we do a lot of business with? With China. China, who killed 6 million people in every country with the coronavirus, right? They steal all our technology. I'm talking about the government. I love people in China. I've been in China. I like it. I'm just talking about your government, right? They lie about everything, committed genocide, makes people who speak out against the government suddenly disappear, right? And how do we treat China? With open arms. But wait a minute. Didn't we? They had the Olympics there. And what do we do? What do our politicians do? The politicians boycotted the Olympics. We were able to send our athletes there if they boycott. What does that mean? It means our politicians didn't go to Beijing and take photos with China's politicians, right? Higher ups. That's what it meant. However, we have Visa, Airbnb, Procter & Gamble, Coke, Intel. They're sponsoring the Olympics. They make a ton of money there. The NBA is still broadcasting and supporting China's along with our NBA. Why? Because we do a ton of business in China. And every politician is on the take. And we know that. There's so many links linking it back. It's not a conspiracy theory. If you really do a little bit of research, it's fine. I get it. You can call it lobbying, you can call it whatever it is, but it's so funny how we have one place that's significant worse than another one, but we're being told that Russia is this huge enemy that's taking over this nice little Ukraine country, who's one of the most corrupt nations in the world. And it's just kind of funny. It's not like I'm taking Russia's side, Ukraine's side. For me, I just think it's not smart for us to be poking the bear where, we have a nuclear superpower that we tend to mess with all the time. And we can't really do anything about it because they're not in NATO. So, we'll talk a big game. We'll talk over this. But the bottom line is this. Russia, and I'm going to agree with Trump here. I mean, Russia, Putin's playing this perfectly. Because now it makes no sense for them to invade. It makes no sense to them to go any further. I mean, they got what they accomplished. They have all their troops on the front line, on the border. Now they can demand whatever they want, and which Europe has to comply because they receive 40% of their energy from them. So they're going to talk a big game and say how we stop this or whatever, but they're going to comply because when you control the energy, you control the world, right? And Russia controls a lot of the energy. And then you have the U.S., and the U.S. is forced right now. We are forced to show strength. That's why we see the severe consequences. Why? Because we really fucked up Afghanistan. We just left, got taken over by Taliban, made us look horrible, weak, left U.S. troops there. And now China's looking at us because they're about to take over Taiwan. So, when you look at everything here and everything that's going on, as an investor, here's what you need to know. This is a short-term problem. It's going to impact stocks. It's going to impact oil. You're seeing it impact energy. We'll cover that in a second. But, the bigger problem, as I said yesterday, is more like the Fed and what's going to happen with the Fed, how many rate hikes. We'll talk about that in a minute because JP Morgan just came out. But for this whole problem, there's a lot of noise. You're going to hear a lot of stuff. But under the table, I think a lot of this is going to be settled. Again, I don't know for a fact, but it makes sense. It doesn't make sense for Russia to really have the whole entire world hate them. Because right now they can have the whole entire world on their side and everybody say, hey, we made Russia do this, and Russia's going to get whatever they want right now, be able to sell their natural resources to maybe even the U.S. or whoever, right? I don't know. I mean, we don't need to do that if we drilled in the U.S., but, as crazy as it sounds, but, we'll see how they play it out. But right now, Russia's in the driver's seat. They're smart. Just paint the picture that this is what we're going to do, and now they can get whatever they want because everybody that wants peace and everybody wants peace, and now they're in the driver's seat, and that's how you play politics. So let's see how this plays out. Yeah, I mean, that's how I feel about it. As far as stocks, you can go there. I know you talked about energy for a long time, and now, again, prices keep going higher and higher.
From dumbing it down and taking away outside of like the act of war and or invasion and all that kind of thing, I'm going to dumb this down to my level, and I don't mean to make nice or foo-foo any of this in the seriousness. From specifically or literally a economic and high-rich resource company like him, you could argue he is doing well for what he wants because commodities are high and Russia's a big producer and things like that. Daniel Creech would like to see something here. If you don't already have exposure to oil and natural gas, you should. And the best thing that could happen here is that you see a de-escalation over the next week or two and oil prices drop, say, 5 to 10%. That would be fantastic because Brent is closing in on 100. WTI, West Texas, oil is about 93-ish, 94-ish, I think. Mm-hmm. If those could drop 5 to 10%, you'd see a quick pullback in oil and natural gas stocks related. That would be a good entry point to add to it. We've talked about scaling into positions around volatility in every sector over the last several months just due to rising interest rates and political fears. That would be what you do because higher commodity prices are not going away. If Russia pulled back all their troops today and said, hey, you know what, we were just kidding, gotcha, move on, we'll go play nice again. The higher commodity prices are not over. And there's tight supply, there's lack of drilling, there's political forces, headwinds with the green movement we've talked about in the past. And again, not agreeing or disagreeing, just simply saying what's going on. And that would be great for commodity prices being sustainably higher for the long term. So in a perfect world, Daniel says, hey, some form of de-escalation, quick drop or pullback in the price of oil, and that would be your entry to buy another, third of a position or however you want to do that specifically. But low-hanging fruit of Exxon's, Devon Energy we've talked about, Continental Resources, anything like that, I definitely think you should have exposure to. And don't forget the railroads and the lowest hanging fruit of all, the best inflation play around is Berkshire Hathaway. In my opinion.
I mean, let's stay on the commodity thing, right? Because as higher oil prices, right? If we see higher oil price, higher energy prices, it means every other company, right? Every company, right? That impacts every one of them. So what are they going to do? They're going to raise prices. And so that leads directly to inflation, which hurts us all. It's funny how all of a sudden nobody's talking about coal anymore. And coal is very, 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 very interesting, which coal prices in January 2021 is $60. You know what they are today? $235. If you want to see companies that reported the best earnings this earnings season, and probably the past two earnings seasons, you can look at Arch and Peabody. And these companies are seeing so much demand and generating so much money. And again, you're not going to hear it because they better not put publicity on this, right? You don't want that. Everybody hates the coal of the enemy. They're killing the world, right? But what they're doing is they're exporting a lot of it to places like China and people that are using it, right? They're promising that we're going to lower emissions. Instead, they're using very, very cheap coal to fund their operations and build their economy while we decide to cut our drilling right now because, which again, I'm support climate change and I agree with it, but it would be nice if we had the renewables to cover what we're cutting. which is why we're seeing this massive surge outside. It was happening before this, Ukraine and Russia this escalated. And to see where coal is going right now, to the point where these guys are generating so much free cash flow, it amounts to about 80% of their entire market cap. Try to find a company that you could say that about. There aren't any. There's zero. You're not going to find that any place. Whatever. I mean, let's add a different quarter, selling business or whatever, bought in cash. But when you look at that, what everything else is paid in that free cash flow, free money, that the amount of money that these companies are making right now and phasing out a lot of their operations like they're supposed to, and they thought that would cost a lot of money, but now it's not, because you're seeing coal prices higher and just focusing on other things like, coal that's, a little bit cleaner than the real dirty coal. In those dirty coal plants, that's what they're shutting down in the U.S. But man, it's just the commodity prices and what we're seeing. Look at lumber. Lumber's through the roof again. Even palladium, platinum have been surging. I mean, surprised gold hasn't really taken off here. We're just waiting for that. It has steadily moved higher. Seen some of these stocks do a little bit better, but I'm surprised it's just not surging here. But coal is, man, China's using it more than ever. It's just,
China and India, absolutely.
India, two largest consumers of coal, and wow, it's crazy. It really is. So, there are plays off of this that work. Inflationary indicators are going to continue to go higher as long as we have this, back and forth. We're looking today as we started this, and NASDAQ was up around 1.5%. It's down now. Same with the Dow as we're doing this, and we're doing this around 10 o'clock, 10:15. So, you're going to constantly see this back and forth, but there are industries that are going to continue to do well, that will do well in inflationary environments, and also just have pricing power. And I covered a lot of that yesterday, and that's really what we're seeing here. But it kind of is amazing just to see where coal prices are, where commodity prices are, and just continue to surge.
I have a fun stat for you around coal, and I'm gonna totally screw it up right off the bat. So I'll admit this. I don't have the year over year or anything, but it has to be significant. And for everybody out there, we've referenced different where we get data and different websites and things. Oilprice.com is a great source for energy related all kinds of things, as the name includes or hints. Between January 2019 and November of last year, commercial banks funneled a jaw-dropping $1.5 trillion in the coal industry alone. 80% of coal financing and investments come from just 6 countries, which this isn't going to shock anybody: United States, China, Japan, India, Canada, and the United Kingdom. Nothing can go straight up forever. We're going to see ebbs and flows, volatility and things. But here's why I think this has a lot further to run, or at least sustainably higher. You mentioned if we could replace all the energy needs from quote-unquote dirty to quote-unquote clean, that would be fantastic. And I don't think anybody, including yours truly, would be upset with that. But since you can't, and it's not actually possible, then there ought to be better steps to take. Here's why it's going to continue. This gentleman, the head of research, they're basically saying, unless we end financing, they're not basically saying, this is a quote, unless we end financing of coal, it will end us. They're not even acknowledging the fact that people need energy around the world, and they don't care. They don't care about higher prices. They're simply saying, hey, this is such a serious situation that if we don't get off of coal and just cut off the financing, then it's going to ruin and kill the earth. Mm-hmm. That, my friends, is all you need to know on why this is still a timeout box. Coal is a swear word for investing. Just like leverage is a swear word. If you say leverage, a lot of people just think you're being a housing market in 2007, 2008. And it's not. So as long as you have people just putting their head in the sand and thinking, hey, we got to get off this because the world's coming to an end, you can make a lot of money as they come to realize that just simply isn't true.
Yeah, I mean, that's a bad word. Really quick, because I'm going to bring up
we
a
need
chart.
A swear jar, Frank. That'd be a fun little podcast thing. We need a swear jar for different words. Not good words like you used, but like coal and things like that.
Yes.
It'd be kind of fun.
And even swear words. I get,
get subscribers to.
Yeah. My emotions come out and then New York comes out. So I curse. But right now I have the UK gas chart here. And it's kind of funny if you watch it on the YouTube page. If not, I'm going to explain it to you if you just listen to iTunes. But you're looking at $30 prices in September 2020. And they went up as high as almost $400. $350 went as high as, and now it's at 200. And, so they don't have leverage, right? It's just, you don't have leverage in Europe where you want to cut off, your biggest supplier of energy. But another one, you mentioned a dirty word. Another real dirty word is uranium. And that solves a lot of people's problems when it comes to uranium. So, I'm just surprised that you're not seeing more. We just see a huge rise, right? We're looking at $28, $29 prices. They did go for 50 for a little bit and they pulled back down. They're like $43, $44 a pound. But man, that solves so many problems, especially in Europe, which really, again, Fukushima, a lot of craziness, and everybody came off of, everyone's going to die and nuclear plants are going to explode every place and all this stuff. But if you really focus on that, I mean, it can cover a lot of these costs and reduce the need for these fossil fuels. And it's the cleanest fuel. It's 24-hour base load, which is not like solar or wind, where you need the sun to be out or the wind to be blowing for energy. And it just makes sense. It's safe. A lot of people worry about it. I get it. But, man, you can see in some plants turn back on. France turned back on. France also said that they're going to use a little bit more coal, which makes sense because – yeah, they have to. You don't have a choice. I mean, look where prices are when you have all these initiatives and stuff. But man, I'm surprised we're not seeing more out of uranium, Daniel. And, prices really, really surge. Because even in this environment where we're seeing how oil prices could really skyrocket, and they're going to stay here, guys. Even outside of this, they were rising tremendously before this crisis, right? Before Ukraine, Russia. Just when you're looking at demand, the supply issues, and so much supply coming off the market and underinvestments and stuff, this is going to be around for a while. The energy is going to be around for a while. You're going to see high energy prices. So, it will be interesting to see how this plays out, but man, uranium just makes a lot of sense for me now.
Uranium's in the same situation as gold. I'm just surprised it's not spiking and a lot higher than it is. I wish I had a better answer to tell everybody that. I'm as dumbfounded as I have been, but that's the reality of it. So we'll just continue to research and follow that. But yeah, both of those are kind of head scratchers on my end.
Yeah, no, it definitely is. It definitely is. And it's just kind of funny because, all this stems from, all of the, you have Fukushima, you have, it seems like every 20, 25 years we have something with nuclear, with a radiation link or something like that. But when you look at where the most earthquakes come from, and that's what happened with Fukushima, they happen along the Ring of Fire. So the Ring of Fire, and that so happens with the Ring of Fire is where the most nuclear plants are located, right? Which doesn't make sense to me, but that doesn't include Europe. Right. So, especially in some of these places where just, very, very little part of Europe, not a lot, if any. But, for France and, just Germany and everybody just like, hey, no more nuclear ever. It's just, for me, I kind of think it's funny when you really look at it. But and right away, I'll bring up a picture right here where you could see it through the Ring of Fire. But that's where you see that, the most earthquakes happen. And, so let's not build nuclear plants along that if we can. But it doesn't mean you have to close every single one because, man, that would take 24-hour baseload, cheap energy, cleaner than ever. It just makes sense at every level. But again, it's a dirty word. It's a dirty word that people are definitely afraid of, and it's crazy. It's crazy. So I guess coal I think is better. I think coal is more. I would say. I think people could when it comes to coal, say, hey, I'm okay with coal much more quicker than they would be okay with uranium. I think around the world, I really do. I think in the U.S., that's no. But like every place else around the world, I think that's...
The meltdowns, the fears of explosions and radiation. I mean, I get that to a certain extent. I'm not, you could go down there, you could have conversations and explain how it's safe and why it's safe and all that. But, meltdowns are awful. And, I give people credit, or I at least understand that sympathy and that worriness. I'm not saying it's enough to stop and not build them out, not continue down that path for all the positives, but I understand how the highlight of the negative is an eye catcher. Granted, I mean, you can't, you're not overlooking that. Yes.
Yeah. And it was funny because yesterday it came on, and this has to do with the conversation here, where how a lot of this causes inflation, and we're seeing inflation rise. We're still very, very strong inflation numbers. Very surprising. Usually higher prices is a cure for inflation because it just results in people changing their habits, and people are going to change their habits, right? It's just, eventually they're not going to pay as much, and you usually see it tail off, which, the Fed thought that would happen over the past 12 months, and it didn't. But now we're getting to rate hikes and how many rate hikes. And it went from 3, 4, we were debating, and I think I was over that, and you were kind of like, I don't know if the Fed will or whatever. And then we're going to, I think Goldman Sachs went from 3 to 4 and in a month from November to December. Then in January, I think they said we can get 6. And now you brought this up, and I didn't even see this. This is from 2 days ago. JP Morgan came out and said that they see 9 rate hikes. 9 rate hikes until March 2023. That's a number I haven't seen. I don't think that number is being factored in, and I hope that they're wrong on that, Daniel. But that's that's definitely a very big number I haven't I haven't seen or heard yet.
And they were saying, hey, they're all going to be 0.25%, 0.25. There's been a lot of talk about, hey, they can, and you've pointed this out, and it's correct. They don't have to do anything in the sense of they're trying to be transparent. They're trying to steer this big ship and tell everybody what they're going to do to take away from volatility. Just shows you they don't know what they're doing because it actually adds to volatility. But they could say, hey, instead of 0.25, we're going to go 0.5. A gentleman from the Fed, I don't know if he's a voting member, but last week, didn't somebody come out and say, hey, I'm in favor of raising 1% right off the bat? So screw 0.25, 0.5, let's just go to 1%. You could do any of that. Again, they should be raising rates quickly. I just don't think that they're going to have the guts to do the right thing. Color me.
I don't think it has to do with guts. I think they have to. I mean, if inflation
right, but they still have to come out and do it. I mean, they still have to take action and say, yes, we're going to do that.
If you don't do it, you go. I mean, rates are going to rise. You're seeing rates rise already. But I mean, if you don't do it and inflation continues to go higher, you risk destroying the economy.
Absolutely.
Inflation is extremely
not arguing with you that
it's dangerous.
Just don't have a lot of faith in them. Is all I'm saying.
Look, we have a recession, which is a normal course, and you seen the S&P 500 close yesterday at I think it's whatever down. How much is it down? 10, 12, whatever it's down. Correction territory.
Yeah.
Not a big deal or whatever. But Nasdaq's down more than that. So is a Russell. But when you look at all these numbers and factors on a whole, where you're looking at, okay, where's inflation going, and it hasn't really tailed off yet, and then you look at a Fed that's saying that knows that behind the curve. I mean, they haven't even done anything yet.
Right.
So I mean, anything less than a 50 basis point hike is going to be very, very surprising, right? Half percentage. That's going to be very, very surprising. I don't know if I could say 9 consecutive, because a lot could happen in 9 consecutive. I mean, you're talking about through, this is longer than a year. This is 13 months where we could see these prices really tail off. That's a good thing. But the Fed has to react right now, and they have to react immediately. This is something that they can't afford to let. It's already not totally out of control because our economy is still holding up well. A lot of assets are higher and home prices are higher and stuff like that. But when that changes, and I said it yesterday, this is going to be the first time in history that the Fed is going through a tightening. It's about to start a tightening cycle with all the major indices below a 200-day moving average. That's never happened before. That's freaking scary. With that said...
Say that again. First time it's hiking.
First time it's going into a tightening cycle where they're hiking interest rates when all the major indices are below 200-day moving averages.
Okay. All right. That's a fun fact.
That's scary. Usually it's the opposite, right?
Right.
These, start getting hot. Okay, let's read. But it's, so that's what happens when you're backed into a corner. You continue to inject money into this, even though asset prices a year ago were at record highs, and we went back, look at the earnings. Earnings get back to normal pre-COVID. And you still, pedal to the metal, which is why we have massive supply chain issues, because we're not talking about hundreds of billions of dollars. We're talking about trillions and trillions and trillions getting injected to the system. And that's what's happening. So, I think this forecast is kind of useless. The JP Morgan forecast, where they're saying, 9 times, 25 basis points each time. I mean, to me, just so much could happen 6 months from now where, I'm hoping that prices, and a lot of people are hoping that prices just ease a bit. And then they're saying, hey, we're not gonna tighten as fast as quick, and who knows? Maybe we'll stop tightening, a quarter or two. That's what you want to hear, because right now there's still uncertainty. There's so much uncertainty, Daniel, that we're talking about November. It's February. We just talking about a couple of months. We went from 3 rate hikes to 4 rate hikes to 6 possible to 9. You want to talk about an uncertain market and throwing Ukraine and Russia? It doesn't get more uncertain than this.
Yeah.
The only advantage, what I said yesterday, the only thing that's a positive is that the hedge funds and everybody are net short. Everyone's leaning to one side, shorting this market. The net equity exposure was over 40% at the beginning of the year. It's negative now. It's -8. So equities are the net short. So when you're looking at that position, everyone on one side, it's usually a contrarian indicator, because all you need is one tiny little positive note. Just one little tiny positive note. If you get, tensions ease to Russia, you're going to see this market really spike. And it's probably going to spike 3, 4, 5%, maybe more, because you're going to see massive, massive, massive short covering.
Absolutely.
Because everyone's leaning to one side. That's the one positive. So, but still, a lot of risks out there, and hopefully this plays out right. But the risks come with the uncertainty, and this doesn't help with JP Morgan 9 times. Where did that come from? Out of left field. We're talking about the biggest bank in the world 9 times. And we're talking about 9 times where Jamie Dimon has the biggest ties to the Fed, right? I mean, he's got the most connections to the Fed. One of the smartest men in the space, whether you like him or not. I think he's a pretty straightforward guy. But, there's a lot of uncertainty out there, and you got to prepare.
If I can, one one data point on why I don't expect that many hikes and just don't really have a whole lot of faith, because one thing that's helping the Fed is higher oil prices. And the longer the oil prices remain higher, going forward 3 months, 6 months, it's going to help them, in my opinion, because when you have sustained higher oil prices, that makes the cost of everything move higher. That's going to hit everybody, you, me, everybody listening to this podcast over time. Filling up your tank, $2, $2.50, from $2 to $2.50 to $3 to $3.60, like it is on the island, that weighs on you over time. You do that another quarter from today forward, it's going to cause effects and cutbacks somewhere else. I say all that because the inflation readings coming down the pipe 3 to 6 months, I think will back off some, and that will give them a little bit of grace. You got to quit seeing the spikes of year over year and all that kind of stuff, because headlines saying, hey, 40-year high inflation, that doesn't look so good. Now, you're going to get a hike in March. You're going to continue to get higher commodity prices. And I think the following inflation readings after that, as long as they show a little bit of improvement, that's going to give the Fed wiggle room, and I think they're going to use that. So,
I know what you're saying with higher oil prices, but we've seen higher oil prices for months now.
Yep.
6 months. And in the middle of that, we've seen inflation absolutely surge, which is the opposite of what the Fed was going to do. So my only fear is that I hear you. Like the cure for, inflation is higher prices because people are going to change their business habits, and then you're going to see, less demand, going to have to lower costs. And again, that could force a recession and profit margins get hit and stuff like that, leverage coming out of the market. But the problem is we're seeing oil prices surge and inflation continue to surge. And that both of those signs, we'd like to see those trends, both of them, right? I mean, come down, and we're not. So it'll be interesting to see how it plays out, because energy is the one thing that affects every single company across all industries, higher energy prices, most industries, but not maybe software companies and stuff. But yeah, it impacts a lot, right? Especially industrial sector. So, and that's going to force them to raise prices tremendously, and logistics and stuff like that. And it does affect even software companies. If you're getting parts and stuff or whatever, any place, for your computer systems or whatever, you're going to see much, much higher prices. But it will be interesting to see how it plays out. It's just, I think everyone's waiting for, some moderation here, and we're not getting it. And that's why it's like, holy shit, like, how come this hasn't happened yet? I mean, surprised the Fed tremendously. And it's still surprising right now. Hopefully, those trends change. Again, all you need is a little bit of good news, because everyone's leaning short this market, and you're going to see this thing really, really take off. And plus, there are companies that are getting it done that have pricing power. I'm not saying to sell off everything, but I wouldn't be going into the highly leveraged positions yet. Those SPACs are down 80%. I wouldn't even touch those, because when you look at the valuations, guys, like I said, with Virgin Galactic, it's still trading at a $2 billion plus valuation and a market cap generating $3 billion in sales. Okay, so it was like 10, 12 billion or whatever it was. But even after the 80%, people are like, wow, I'm going to buy this thing. I don't see a lot of people going to space anytime soon to the point where you're scaling that business. So again, it was a lot of people made money, and unfortunately, a lot of average investors got the shit kicked out of them. But the Wall Street guys made a fortune off of it. It's sad, but that's what happens with most SPACs. And I think you're going to see SPACs not completely disappear, but down tremendously. And, I think people are onto these crazy valuation and people dumping the stock right in your face and all this hype and shit like that. I think that cycle has played out. I don't think you're going to see a lot of SPACs come out going forward. So we'll see how that plays out.
Yep. You want to piss everybody off with a SPAC? The DWAC is at $87. It's down 6%, but it's still huge.
Yeah. I mean, at least you could put a valuation to that, because a lot of these SPACs you can't. They're going to try to put valuations on. It's funny when they do the road shows that they try to explain how this company that was worth, $500 million 3 months ago is now worth $3 billion, right, in 5 months, all because it's a SPAC, right? And they're raising this money in pipes and giving everyone whatever they want, $1, $2, $3, and you get to buy it at 10, 11, 12, 13. But with that, you could look at the amount of people that followed Trump on Twitter. And if they get a certain percentage of that audience, you could see how much that's worth, because that's worth a fortune, right? That's why Peloton is, you have so many bidders, even though it got crushed, because you have a lot of people, that recurring revenue. When you have those people on a platform that are going to follow you, now you could sell them anything you want. The hardest thing is getting them to the platform, and he has a massive following. So I'm sure you're not going to get even 70 or 80% of that audience, but if you get 30, 40, you're talking about how many Twitter followers did he have? I don't know, hundreds of million, 100 million? I don't even know, but now you're talking about
it was a bunch,
tens of millions of people on that platform and stuff that, that you could sell stuff to, whatever. But, to me, I could see that where, okay, that SPAC, makes sense, where you could put a valuation behind it. But a lot of this other shit where it's all positioned to where it's it's basically a pump and dump scheme. Every one of these, almost every one of them. I would say like 85% are pump and dump schemes, right? They just inflate this shit, go on the roadshow. They don't even have to disclose like warrants or, a lot of stuff and ownership and doing these pipe deals. And then, finally get them launched. And, everybody makes a fortune while, not everybody, but all the insiders make a fortune, accredited investors. It just really pisses me off when I see that whole system. But that one, at least, DraftKings are right. They did the right thing. I know that one's getting crushed too. Their leverage and it's a roll up and they bought, a whole bunch of shit. But, there's a couple of them that are doing the right things. Most of them, especially the later ones that came out in 2020, 2021, a lot of those are really garbage. And you're seeing it right now. A lot of them are getting destroyed. So we'll see how that market plays out. But Daniel, that's our time. Thanks so much for coming on. Great stuff. Love your opinion and glad you're doing better. And most importantly, happy birthday, man.
Yeah, thank you. Thank you very much. It's great to be here. Love Wednesdays because all you guys out there. So cheers.
Yeah, and just remember, if you were offended by anything Daniel said, give him a break today. Don't send him an email. Send it tomorrow, not today, because it's his birthday. Right?
You can send it today. I'll read it tomorrow.
Yeah, I'll read it tomorrow.
Daniel at CurzioResearch.com.
Yeah, that's cool. All right, guys. Questions, comments are free. I'm here for you. Email me, frank@curzioresearch.com. That's frank at curzioresearch.com. Really appreciate all the support. And I'll see you guys tomorrow. Take care.